is a constant flow of information that is coming in here, and how would I judge it? As an example, hello fellow cryptographic currency traders, this is the first public video of a series of educational videos that will be put out. One of the questions that I always get asked was how do I use, or what is actually agr.trade when looking at Confluences based on whatever Bitcoin is doing around the point of interest that you want to trade. And I wanted to start off with a very quick video about how to set up and how to interpret the data using these free templates that aren't mine, but they are very good, and I'm using them for I think the past 4 years. I don't want to keep this video very long, so I'll go through it as fast as possible. And of course, remember to like the video, subscribe to the YouTube channel, and leave a comment with whatever kind of videos are of interest for me to make in the future. If you have any questions and stuff like that, I always reply to all of the comments. And of course, you have in the description link below to our Discord community and Twitter handles and stuff like that. Moving forward, what is agr.trade? Basically, you are looking at an aggregated, AGR comes from aggregated orders that are market executed. So first of all, what you see here on the screen, it might look a little bit different than the standard default agr.trade website, but that's because we're using a template that gives us a little bit more data than the default settings one. So with that in mind, we will be looking strictly for Bitcoin. I use it more for getting Confluence with market executed orders when I'm trading Bitcoin, or when, for example, I'm looking at a point of interest on Bitcoin and I want to sync one of my altcoin tradings. So just to try to sync them together. So what are we seeing here are only market executed orders. And of course the data that is shown. So first of all, you go to agr.trade, and then I will leave a link in the description if you haven't. We're going to use a template from somebody called CryptoRife. He puts out a lot of free templates here. The first one, the latest one actually, version 2.4, is more complex and is different from what I'm using. I'm using the version 2.1.1, this one, because it has a little bit of a better split, especially for people that are beginners. Doesn't overload you with a lot of information from the start. It's enough information to help my bias, but it's not overloading me visually, and it doesn't create any kind of, let's call it, paralysis in execution because of too much information. So I am using version 2.1.1 for Bitcoin. You get all of the links here to download from him. Again, it's not my template. I'm using it for over 4 years. Using older versions of them also from the past. Go down here where you have the 3 buttons, settings, and then in workspaces, basically you put new and upload template file. Okay, that's all. And you will see everything that is on my screen. The colors might be different. You can customize the colors. You might have, I don't know, you might want to have green instead of blue or whatever. It doesn't matter. The format is the same. Now, once you have this, people are asking me on what time frame I'm using it. I'm using it on the 5-minute time frame here. So first of all, here you have the price action, the candles, the Japanese candlesticks. Here you have standardized both cumulative volume delta, CVDs. We'll not go into that, but you will have them CVD BTC spot and CVD BTC perp. You have 6 indicators as standard. So this is the delta spot. Whenever you see delta, it means a difference. So basically it's showing you the differences between the spot volumes. And then you have the deltas for the perps. Now we have enabled all of the 39 markets. So basically you're using aggregated data that shows you the average between all of them together. So the prices that you see here might be a little bit off based on your exchange, but you have everything: Binance, Binance Futures, Bitstamp, Spot, Bybit, OKX, and so on. So basically, I'm not changing anything here. I'm using the 39 markets, and I'm using the standard 6 indicators. Here you have volume shown. So we went through CVD price, of course. This is the price. CVD spot blue, perp is red, or how you want to call it, dark pink. You have the normal volume candles here, and you have the delta spot and the delta perps. This is the first window you're seeing. Now, what you're seeing here moving on the left and on the right side. On the left side, it's showing spot trades, so only market executed spot trades. Do not confuse them with limit trades. This is not a platform to watch heat maps or limit orders, or this is not a full order book platform. It's just showing you what is executed as a market order at given time. We have left for spot, basically taking all of the spot executed orders. Here you can see it also on the icons. So for example, this was a sell from OKX, this was a buy from Coinbase, and so on. And on the right side you see everything from perps. Basically, if you see people shorting or longing perps themselves. Very important to see also the liquidations. So basically here it's showing the Bitcoin liquidations from different exchanges. You can see these are the bear liquidations. But it's not it's showing you above 50k. So basically it's creating something that's accumulative and showing you above 50k dollar value liquidations. Why are all of these of interest? Basically, we need to see where are people getting. For example, if you want to trade the liquidations, you want to see where are people starting to get aggressively liquidated, as in big sums. If you want to trade, for example, you want to long Bitcoin and you have a pullback, you want to see spot bids coming in, or at least absorbing. Basically, spot bids are coming in while price is holding, and that means that there is aggressive spot buying at your point of interest, so you might consider longing it there as an extra added confluence. That's why you can see the different colors. Whenever, for example, here it was a 2.8 million short that just opened on market entry at 94,300. There is a different color, and when you have a bigger, like 1 million plus sizes, you have also like a liquidation here, so it pops up more easy visually. Here you have also the liquidations shown. So now we're looking, this is on the 5 minute, I used on the 5 minute. Here you have on the 1 minute, and it's basically showing you the same thing, price on the 1 minute, but you can see each exchange. This is basically the delta spot from Binance spot, Coinbase spot, Bitfinex spot, and Bybit spot, while here you can see the cumulative of all of them based together, like aggregated. You can see each individual's exchange volume delta. And the same for the perps ones. We have Binance perps, Bybit perps, and OKX perp. You can change this if you want. You can customize it how you want. For me, the most important ones are, of course, Binance and Coinbase spot, and to see if we have something aggressive on the perp side. Now, you also have, for example, 1 minute liquidations here, volume delta per minute, and stuff like that, trades per minute. Here you have trades per minute and volume per minute to see if the volume is increasing. Whichever is the case, at least you have some kind of added confluence based on market executed orders. Of course, this comes in with standard, next to standard technical analysis or volume profiling or whatever type of trading you do. This is just used as an added confluence, as I said before. I will not go through triggers and how to use it. Maybe in a future video if there is interest in that. In a lot of my live streaming, you see me executing in real time using this or syncing altcoin trades with this. So there is there is a constant flow of information that is coming in here. And how would I judge it? As an example that on the low time frames we have a little range here, and we have yesterday's low at 91.6. If we see any kind of pullback here and the liquidity grab under 91.6 with long liquidations coming in, so people are getting caught offside, but then you start seeing a lot of buys from spot, especially here. You can see, for example, from Binance Spot or from Coinbase, more important, seeing buys on spot. If you go back in time, we can see here, for example, Coinbase heavily bought in this area. That gives me more added confluence to execute my trade at the point of interest I'm in, because that means that there is spot buying interest at that area, and I can go along with the bigger spot buys and maybe long as an intraday scalp or position for a swing in line with them. What I don't want to see, for example, let's say you have a point of interest and then you see a lot of spot selling and everything continuing to grind down, and absorption is impossible. Now, the same in reverse. For example, if let's say, for example, you wanted to short 95k, and at 95k, ideally you would like to see what? Well, shorts being opened here on the perps, but ideally you would like to see a spot selling, as in people taking profits on their spot bags or in their spot trades and so on. That gives you extra confluence. If, for example, you do not see a rejection and you see spot buying into the breakout aggressively, very similar to what happened here, so basically it gives you more, let's say, a warning to maybe wait for a sign of weakness before, and not to blindly short that level, because if spot is buying into the breakout, you might be caught offside. Or, for example, it might just show you, let's say, maybe you're long from lower and you want to take profit around 94, 95, and you have this, let's say you have a little breakout and you see that spot is still buying. That maybe gives you a little bit of added confidence to hold that trade longer, because there is no sign of weakness yet. So these are three methods where you can use agr.trade. Basically looking for spot buys coming in at your point of interest to long, looking for spot sells or liquidations, bearish liquidations for people getting offside to short for more confluence, or just use it as a general take profit strategy where your levels are. Maybe it makes you hold your trade a little bit longer because basically you're in line with the trend, and the spot market is also lining up with the trend, and basically the momentum is carrying you to a higher take profit area. We will wrap it up for today's video. I don't want to make it very long. Thank you very much if you watched it all. Don't forget to subscribe, give a like, leave a comment if you have any questions for me, and until next time, I wish you a good trading day.